Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. When you're in a business where every decision gets multiplied by a large factor, getting it right to begin with is super important. Too often we ignore the little things, and they turn into big things. I can't tell you how many people I meet in the real estate world who don't know their numbers and don't have good systems in place to track them. They wonder why they have so much money coming in and nothing left at the end of the day. That's our subject for today with Elisa, who is a master at focusing on profit in her real estate business. Elisa Zhang is the owner, principal of over $250 million in holdings across 1,700 plus apartment units in her portfolio. Many of these apartment buildings were acquired through 1031 exchanges and syndications. She remained fully involved in the multifamily investing world throughout the pandemic and has never stopped for looking for and finding deals for the benefit of her investors. She also focuses her time and expertise on helping typical 9-to-5ers quit their jobs by using the power and infinite opportunity of real estate investing. Elisa quit her corporate IT job because of multifamily real estate investing and is committed to helping others learn to do the same through her course offerings at EZFI University and on her podcast, 10,000 Roads to Financial Independence. I was a guest on that. Outside multifamily investing, she is a mom of 2 cute kids and breadwinner of her family. She believes that if she can do it in 10 years or less to reach financial independence, so can anyone. And just so you know, being financially independent and having the freedom to do what you want when you want is pretty damn awesome. Let's meet her and find out how she did it. Welcome to the Profit Answer Man, Elisa Zhang. It's great to have you here.
Thank you, Rocky. It's great to be here.
Can you share a little bit about yourself and your business?
Yeah, definitely. So I am a syndicator. What syndicator means is we pull money together and go buy something. So in my case is multifamily, which is apartment, another grokky term for apartment. So I operate apartments. Not only I syndicate apartments, I also buy apartments by myself. And I also passively invest in other people's apartment projects. So apartments, all I do. That's what I do. And we have over 2,000 units spread in Dallas, Houston, and Phoenix market currently as an operator and a syndicator. Yeah.
Congrats on your success. You know, the one thing I have found with real estate is when you make a decision, right? Small decisions, like let's just say we make a $5 decision on something. Then you multiply it by 2,000, right?
Yeah.
Because you're and how the portfolio is performing.
Yeah, absolutely. Yes, definitely. Yeah. That's you just kind of hit the nail on the head over there. We definitely, like having to figure out the per unit profit, but also the beauty about number is that when you multiply them, they get a exponential effect. Essentially, and in our business with multifamily is that the bigger units, bigger property you get, you are able to kind of cross leverage. Like, let's say we have 1,000 units in Phoenix, so we're able to cross leverage our vendors and rinse and repeat. So that actually helps with making a number even better. So 1 + 1 is not just 2, 1 + 1 is more than 2.
Right, because if you can keep your overhead costs, which are more relatively fixed, in line, and you add another apartment building to it, and you don't have to increase the amount of people to service it, then that's where your profits really start to grow.
Right. And also you reduce the number of communications, the tracking, the back booking, accounting. If you're dealing with the same vendor, you don't have to file, multiple different 1099s, like every little things kind of just add together. It adds up. Yeah.
That it does. Now, you recently 10x the profit in your company. What's your secret?
Well, it's not in my company. I guess it's in our deals. So not every single deals that we do is 10x, but some deals that we do are 10x. I think it's really about, there's a couple, picking the right market, picking the right asset, but that's also about relationships. So as you kind of building this flywheel, what you call, and you start realizing the people is the most important resource. So I think market is really important in any type of investment. You can kind of, now the beauty about the real estate investing is that you can pick different markets. So you can actually take up a property that you invested in and that you can go to the next market. And then so you can kind of movable, right? So a lot of people invest in the backyard. They're like, oh, I don't ever invest outside of my backyard. So the time when you learn about that is the minute that you start investing outside of your backyard, that everywhere can be your backyard, which is pretty cool. Because it doesn't matter if you're managing a property remotely, it is remotely. So it doesn't matter if you're in here, you're Phoenix, you're Dallas, Florida is maybe a little hard to get to from Seattle here. That's kind of like a really different. Now, the other part is like the people part. If you invest out of state, you're going to start realizing a lot of stuff you do, you have to let go of your control. You don't let go 100% of your control. You let go, your day-to-day control. And then just feel free to kind of let people take their process, which works, to implement this stuff that way. But as long as you have your finger on the pulse. So I want to
let's talk about that, because I think a lot of business owners struggle to let go.
Yes, absolutely. Because as entrepreneurs, you build up your company. There's multiple stages of building companies. So in the case of as entrepreneurs, when you first started, you're like one-man show. Most people started with one-man show. Not all, but most people do. And you start experiencing some success, some exponential growth success. Then you realize you don't have enough time. Then you have to hire an employee. And once you kind of start hiring employee at your first level, maybe like 9 to 10 people at max is who you can manage. Probably for me, it would be like 5 and tapped out. And then you have to hire second layer of employee. Then you get to the next stage of 90 to 100 people. Or 40 to 50 people. At that stage, you would not have the control with everything. You can't oversee everything. So you need the mindset shifted when you decided, I trust someone else to do the work that I was doing before, and do a better job than I am. And it's important for you to also realize that certain things that you're incompetent of, you should just let other people do it. And if you set the right metrics and the key metrics to it, then you can measure the accountability of people, and then just let them do it. And there's other methods to do it. Don't be micromanaging and all that stuff. So letting control is actually a point where you're realizing I can't do everything. To not just like, hey, I'm going to direct people to do stuff. Then the next stage is I trust this person's ability. So I'm just going to let that person do stuff and tell me what to do, or, give me the results of it, but trust that person to run it fully. So when you get to the last stage of it is when you got it figured out in order to exponentially grow your business. In the business growing side, Rocky, I know you were talking about like our projects 10x that. Like in business side, I had once someone told me about this. They said, well, your growth is really about how many employees that you hire to some extent. And then that every employee that you hire should have an exponent, like it should have ideally an X factor to it in terms of growing your company. So you have 10 times your business if you went from a one single person business to a 10 people business. Like you just did that. Congratulations, And then, of course, there's also 10x your profit. Not all businesses are built the same. Some needs more manpower. So even after you hire the 100 people, then you start 10x your profit, vice versa. Versus some projects, some people like us, financial advisors, syndicators, we don't need as much of the resources. Then you can get away with 5 people to 10 people offices, back offices. That being said, I want to kind of get back to what you're asking about the 10x secret over here is, again, you're building a team, you're building partnerships. So even though our back office is about 9 people totally that works with us, with contractors and as well as full-time employees, we really have a web of like probably at least 100 people working with us, right? For the portfolio size that we have. And this is reflected in property management. So property management team. So on each side, we will have anywhere between 2 people to 7 people staff. So it depends on how many sites that you have over there. So you have to trust all the people kind of running them properly day in, day out. There are going to be high turnover rates on the property management side, but if you treat people the right way, you build a long-term relationships. So the benefits are really about long-term relationships, and you kind of reduce the turnover for the property management side. And then if you build the long-term partnerships, if you focus on giving value to people, people's kind of pay it back. I always believe in kind of karma or people resources, people credits, right? And then they're going to pay it back to you. If you help them out when they're not the biggest in the town, then they're going to rise with you. And essentially, you build a deeper relationships and you're always on a higher priority list. So I believe that's the right way to kind of do your business. And from how do we 10x our project, it's kind of from that. For each project that we invested, we had the property management team that helps us. We have lawyers. We have basically the brokers, and also our market research and et cetera for that. And then basically reaching the exponential growth. Yeah. Yeah, absolutely. And then it's important that you're listening when it comes to like understanding people. It's important that you're listening to what is the most important thing for them. So just kind of giving an example over here. So we have a little bit unique structure in our property management structure with us. So we basically have asked them to waive their property management fee down to 1%. In normal property management, in commercial business, you're on the size of the building, you're ranging between anywhere from 3% to 6% plus the payroll. So we've negotiated a 1% deal with our property management company, But that doesn't mean that we're taking their piece of pie. We're actually giving them more pie back. So we included them our property management. We include them in our general partner share. So essentially taking dollar out of pocket to pay them. Why do we do that? Is because our general partnerships is always structured in a way that get paid last. So unless if our investors made money, unless all the bills are paid and the investor made money, we don't really get paid. Right. So if you think about it, traditionally in multifamily investing or in any real estate, the property management piece, we understood it was a very key piece. And the property management fee is based off revenue. So we have started noticing the property managers, they don't really care about the expenses, this and that, like all that sort of stuff. Right. And then you ended up, they're like, oh, we have great incomes. And then at the end of the day, you're like, yeah, but it all went to the expenses, right? So it's not based on the profit. But they get paid, no big deal. So, in order to increase our cash flow to our investors in markets that perhaps is not cash flow market, traditional cash market. So we reduce that revenue share to 1% to a property management company. But at the back end, I may structure in a general partner share so that if he perform, he's going to make, based on conservative projection, he's going to make double or triple what he otherwise would be left on the table. So taking care of your partnerships, and then a lot of the good right set of PM is going to take a pride in ownership. Therefore, they're going to be the people who is like, I want a general partner share. So I want to be an owner, right? Because a lot of property management business is a business that doesn't make money. And you go out there, like you think you're like, oh yeah, like this person is charging me out a fee. Back to that, like as a investor, you're like, oh, this person's like charging me all the fees and like based on the revenue, all that stuff. But the hard truth is the property management company business don't make a lot of money. And the reason why that is from property managing, they may have a construction arm, this and that's where they maybe make a little bit profit. It's fee-based management. You're only paying, if you ever looked through your statements, they get kind of paid peanuts. And then that's why they have to hire the minimum wage people to be the on-site property manager. And hence why everybody always complains about their property management company is because people don't get paid enough. If you get a minimum, the joke in the industry is you pay someone $60,000 a year to manage your $60 million property, right? So it's a huge gap over there. But if you recognize that, and that's why you want to kind of be on the ownership side. And then for some property management company owners, there's just never, it's a once in a lifetime chance to be on the ownership side. So we crave for that. Again, listening to what they say, and then partnering with the right people and creating the right incentives. Now, it's a flying well because everything was done based on investors. So this is kind of structured in a way with investor in mind. And then guess what? Once investor thought that you're putting such a thoughtful, structure into there, and also if your communication is really good, guess what? The investor, like a customer, just going to be rinse and repeat and come and invest with you, right? So like I just recently exited a deal. We made the investor 145% return in 2 years. And guess what they're going to do? They're just going to come back to you. But not only that, we make the rolling over to the next projects a lot easier. We're very strategic. When we know a project is exiting, we want to make sure there's more that lined up for them to invest into, because they're a tax event. When we make them money, it's a happy time, but then there's also a tax event. So we try to estimate it for them to make an educated. They don't need a rollover, but we give them an educated, answer to like, this is how much tax you expected to pay, in order to roll over to the next deal, how much money that you needed to roll over to the next deal in order to offset that. And then should you decide not to do it, what is the tax consequences over here? So that's all done as an and we haven't filed taxes yet. Again, people on our team a flying wheel for the whole business over there. Rocky.
I love how you focus on the bottom line and not on the top line, because at the end of the day, it's how much money you keep. And especially in real estate, the numbers are very big as far as the top line numbers, but the bottom line numbers in real estate can very often be very small. And so by changing the focus, not only yourself, but the people you work with to focus on the bottom line, that's important. Now, you share your numbers with your employees, don't you?
Yeah, so I do. I do share our number with employees. There is a level of transparency that we always believe in oversharing. But why do I say there's a level of transparency? I shouldn't say transparency, but there's a level of details that you share with your employees. For example, for our on-site, again, back to the on-site is a property manager that stays on-site. So these are the, $50,000, $60,000 employees, and maybe even lower. So these are folks who manage your day in, day out. So they don't really understand capital markets or anything that we talked about over here. But again, I kind of give them the respect too, because I think a big thing for me is to influence everybody around us to be better, to level up, and then treat people with respect. And this down to don't assume they don't understand. So we always tell our on-site, hey, based on our first year projection, this is the income number that you have to hit. Or this is and then by the way, they're incentivized on net operating incomes, which is a net number with income subtracting expenses on operation side. So it's profit driven again. So we put bonuses in for that and et cetera. But we also set these targets to say, you know what, don't worry about all the numbers, because these folks are fantastic with people to day implement your stuff. But they just can't wrap their head around. Sometimes they don't wrap their head around the number. But we respect them. And then we would say, you know what, we do want to share with you some of the details of why you should be increasing the rent and ideally moving all the money into the rent part of the portion versus put it into other incomes like utility surcharge and all that stuff. And here's the reason why, because when we go to the lender, we're going to do this, and that. And I've been to other people's projects and been passing into other people's projects, talk with management, or been to enough tours. So I know in this industry, majority of the owner does not share their business plan, whereas they're on-site. Because I don't know why. They probably think, well, they don't need to know what I want to do. So it's very important to kind of share that with your employees. It's in this case, not even my employees, but with people who actually works for us. And so really they're our employees. You need to tell them, hey, for a first year, we need to hit $150,000, $1,000 per month because this is how much money we want to distribute to our investor. This is the promise that we had. Not promise. There's never promised in investment, but this is the target that we want to distribute to our investors. And then here's how we can move these. And then when you have that more strategic discussion with them, they understand what they need to do. And I know a lot of owners also hide away from their, I've had this instances where a lot of people tell me hey, don't tell my property management company I'm selling this property. Right. So that they think there's this fear of people losing their job. Therefore, they're not performing. But it's important. We actually put bonus in it when we sell the deal. So our management, our on-site loves when we sell the projects. Here's the reason why. They're not going to lose their job because we're syndicators and we have a lot of more deals that's coming in the pipe. We're going to move them to our other sites. So their jobs, if they're good people, their job security is there. So they know they're I want to work for you because, it's not just this project. So we also match our employee with the right set of employments. But also, when we exit a deal, again, it's a full piece of pie. You share a little piece for everything. It makes everybody happy, and it allows you to grow the pie a lot bigger, a lot faster. So we give them a bonus. So maybe it's a 10% bonus. That's substantial for someone who work at that relationships on the sale. So guess what? They're going to work on. If the the plan is to sell all along, we communicate up in the front. They're going to work harder, faster, and trying to sell this project with us to hit these numbers faster with us, because that's when they get the bonus. And they don't lose their jobs when we sell a property. They just roll into the next one, right? Just like our investors, they don't pay taxes. They just defer and just roll into the next one. So you can kind of sense the scheme over here is to not only make profit yourself, but carry your team with you and carry your investors with you, and then make a bigger piece of pie for everybody, because everybody is now like jazzed with making this pie bigger. And then, there more people can be added. The pie can actually effectively could get slightly sliced thinner. But at the end of the payouts is bigger for everybody. Right.
And I think that's important. Too often we're targeting one group against another, and everyone's fighting for scraps instead of saying, let's all work together to grow the pie so we can all make more money. That's a much wiser way to do it.
Yeah, absolutely. And then the abundance mindset, I mean, that's really what it comes down to. If I'm thinking, there's so many properties in the submarket Phoenix, or so many properties in the submarket Dallas, if there's not enough property to buy, I'm just going to go find a different market and expand into a different market. Then there's a limited amount of apartments to buy, but at the end of the day, there's kind of almost a limited amount based on our capacity to purchase. So really not getting into that your pie or my pie thing. But as long as you can bring people along with you, and also at the end of the day, the financial independence the thoughts about financial independence, what you live for is about the happiness, is about the choice that you have to choose who you want to work with, the choice that you have to be involved in the cause that you believed in. I think these is ultimately freedom for me. So it's important that you're surrounding yourself with everybody that you have a common DNA, have a common vision, have common core value. And that's where you can kind of make the pie together bigger. And that also builds trust in between us. Because if you trust, hey, if the overall goal is to grow the pie bigger, because sometimes when we run so fast, our communication can be misunderstood. Like, for example, Rocky, if you were in a project that was running so fast or talking to the other person about the project, I just simply forgot to update you, right? So in the scarcity mindset, you'll be like, well, why did you not include me in it? Maybe you don't want me to be part of the project, this and that. But if you have an open book and you understand our core values are the same, then you're like, no, she just probably forgot how to communicate to me, or forgot she'll probably communicate with me at some point, which we'll do, right? Versus if you're pitting people against each other, you just automatically assume the worst of the other person.
Now, you use numbers throughout your business, and each of your people also has their own number to hit.
Yeah.
How does that work?
Yeah. So at the business level, we have a profit. We really, our ultimate number is return to the investors. And that doesn't mean that we don't make money. When investor gets paid, we get paid, right? So great. And so let's say the example again, our on-site manager, they focus on collection of each project, like apartment project, on a monthly basis. And they also focus on expenses. So really the net of the expenses and the revenue is the profit. The NOI is what they focus on. So at the higher level, at our asset management level, maybe it's the whole portfolio of, a profit on what we have made, the cash on cash return for each project for our investor, because that's what the asset manager cares about. It's not just the operational level of income minus expenses, but also capital improvements and all that sort of stuff. So they care about ultimately what is the distribution we've made to the investors for each of these projects. And then as a whole portfolio, how we are performing. right? So there's charts of each project that ties into the whole portfolio, what that look like, and also how fast the velocity of money is, like the IRR, which is the internal revenue of return. It's basically a very complicated formula. We have explained this to our investors on website, on our blogs, but ultimately what it is think about it as each year, what is the return of my money? So if I made a 50% return in 2 years versus making 80% in 5 years, which one has higher IRR? A lot of people will be like, oh, maybe it's the 80% in the 5 years. No, actually 2 years, 50% is higher IRR. So your velocity of money matters. So our asset managers are sophisticated enough because they're, financial background and the analysis background, so they understand the IRR. So that's really ultimately the number they're tracking for each of our portfolio. And then at the higher level over here, like what I'm tracking is also the company expenses, right? Because there's the property part of stuff, but on our side too, we have to track the company profitability. So there are overheads and et cetera, like employees that we hire and et cetera, eats into our profit. Not eats into, but shared with our profit into that. And then ultimately our employee gets incentivized, like on our side, like asset management side, they get incentivized by our profit share, not the property profit share. So that's different levels of number everybody can track. And then for marketing person, what that marketing person does, it is still revenue share. So we like to use the same number in our side of the house to kind of share incentivize person, because that encourages a teamwork. So it's not just like, oh, this number is not mine, therefore I'm not looking at it. So everybody on our side needs to understand profit. So that's a one single number that everybody gets communicated to, and you should know what that large number is. And then each person has their key metrics that they're tracking. Like, for example, marketing is looking at lead generation. They will need to look at how many more new leads do we have, right? And sales needs to look at how many new investors that we have converted into our invested investors, that type of stuff. So each person should have 1 to 3 metrics to kind of track and understand the direct impact it had to the profit. If there's no direct impact, then that's kind of get wonky, like personal assistant. How do you quantify that? Then maybe it comes down to like hours saved, meetings booked with Elisa because Elisa's at this pay grade. Therefore, so all that is kind of getting into the profit again. So figure out a way to kind of tie it into that. Yeah.
That makes sense. It sounds like you've got things well under control and you've got everybody rowing your boat the same direction and focused on the bottom line and making profit. Congratulations on your success. If people would like to learn more about you, connect, find out about your syndication deals, what is the best way for them to do that?
Yeah, so you actually cannot find out our syndication deal because we only do business with people who we already know. But in order to find out us, you can check out easyfiuniversity.com. We have an education website. That's our education website to help investors learn about, multifamily investing, passive investing. And then there's some great articles about me paying zero tax, legitimately. And through real estate investing, the beauty of a depreciation, like all sorts of variety of articles over there. So we want to educate people. They don't have to invest with us. The purpose of educating people is so that they understand there's multiple ways. There are so many like conventional channel, telling you to do one thing, like saving money, don't ever spend it, or, and then they don't teach you about investment or put them in the stock and do all that stuff. But there's alternative investment vehicles, and there are vehicles like whole life insurance, et cetera, that are very tax friendly if it was structured correctly. Not all, 90% of them are not structured correctly. And there are tax advantage of investing in real estate, even passively. Right. So it's kind of how to optimize all these vehicles so that you reach your final goals or financial independent goal or growing wealth goal, whatever that is, faster. So that's kind of what we focus on. So www.easyfiuniversity.com once again.
And I'll put that in the show notes. Thank you so much for joining us today.
Thank you so much, Rocky, for interviewing me. Thank you.
It's almost impossible to put a dollar amount on trust. However, when you look closely, you will see lack of trust is costing you a fortune, and it's all hidden. I love how Elisa is focused on the bottom line, and she shares that focus and responsibility not only with her employees, but with her other vendors that she partners with. This is a game changer. You can see she has clear core values and she shares them with everyone she works with. Everyone has a number target that helps them to drive the bottom line and a bonus tied to hitting the profit goals. So ask yourself, how can I implement this focus in my business? How can I have everyone on my team and my vendors and suppliers rowing the boat in the same direction to help me be more profitable? Remember, you don't need more resources. You need to be more resourceful. We focus on the bottom line. If you want a done-for-you service, you can have me as your Chief Profitability Officer, because you have your zone of genius and want to spend your time doing what you love. I only work with a handful of clients, so they get my full attention. I work with business owners who have or are growing to $500,000 to $5 million in revenue. You can use the scheduling link in the show notes to get on my calendar for a good fit conversation to see if I'm the right person to support you and how I can help you. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.